Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Jason Wenk, CEO of Altruist, a modern custodian for independent RIAs. He joins me to announce Altruist Clearing, a self-clearing brokerage that's offering RIAs an alternative to the legacy incumbents. Jason, it's great to have you with us. Welcome to Trade Talks.
Yeah, so nice to be here. Thank you.
You got it. Before we get into the announcement, explain to the audience what Altruist's mission is, where it fits in the custody landscape, and who the company serves.
Sure. So the mission is to make financial advice better, more affordable, and accessible to everyone. We do this by offering a B2B custodian. So we serve independent financial advisors. It makes it a lot easier for them to serve a very broad group of clients at really low costs and an exceptional user experience.
What is significant about the launch of Altruist Clearing?
Yeah, so I mean, in some ways, it's a pretty monumental announcement. The monumental part is that the investment advisor space technically started in 1940. So through the Investment Advisors Act of 1940, and in the last 80 years, this is the very first ever custodian built exclusively for registered investment advisors. So there's a lot of other people who this is their second or third type of their business. They might be more focused on going directly to consumers, but no one's built a tool that every single element of it is 100% focused on registered investment advisor custody and their clients.
What differentiates Altruist compared to legacy options?
Sure. So some of the big differences is that we built our tech stack entirely from scratch. It's a fully modern stack. What that means is that we don't deal with legacy sort of paperwork requirements. The entire process is entirely digital, so it's a really elegant user experience for both the advisor and their end customer. And also, there's some pretty material elements around the actual application use. So things like fractional share trading. This is really massively important, but no one does this for financial advisors. So their clients are forced buying whole shares. This makes them held more in cash than they should. This creates a drag on their performance in their portfolios. It forces them to using packaged products, which have higher fee structures versus individual securities. So there's some pretty I think monumental application perspectives that just increase the outcomes for the end client. These are things that should have always been the way that things operated, but for whatever reason, they haven't.
I would imagine bringing that fintech component into it is also good in terms of growth for the RIA industry, in terms of hiring new people in the next generation of advisors. How much of the wealth management pie does the RIA segment represent? And what does that growth trajectory look like?
It's huge. So today it's, I guess depends on the day in the market, but we'll call it a $7+ trillion in assets just in the wealth management space. So the really broad RIA, space includes asset managers. That's $100 trillion+. But I mean, it's a huge part of the market. It's really the only fast growing segment of wealth management. So if you look at the headcount at major brokerage firms across the country, most of them, it's, for 10 to 20 years, been very hard for them to maintain headcount because so many people decide at some point that they want to start their own business, and they do that by forming an RIA. They leave, they go independent. You look at the last 20 years for the RIA space, and you've seen it go from just a few thousand firms to 40+ thousand. So you've got, mid-teens CAGR, huge tailwinds, and just I think consumers are getting smarter. They want fiduciary advisors that work on a fee basis. They don't want the old school stockbroker or insurance agent, and the RIA space is where you get that.
What's the big picture impact of the M&A we're seeing in the custodial space?
Yeah, it's a lot. I've been doing this for a long time. I kind of think back. It's like when I started over 20 years ago in the RIA space, you had the really big players like Charles Schwab and Fidelity who are still there, but used to have TD. Well, back then it was TD Waterhouse, which then became TD Ameritrade. They bought Scottrade. There used to be E-Trade that got bought by Morgan Stanley, right? So there was Folio Institutional bought by Goldman. So today it's a very small group of firms. You still have the majority of the market share is with Charles Schwab and Fidelity. And it's a really hard business to get into. It has a huge amount of capital requirements, tons of technical expertise. And so, pretty significant moat. And then again, the companies that were here, and some of those, I think most people would have thought were big companies, and they're no longer. They've got kind of gobbled up through M&A.
Yeah. Certainly come a long way since the DLJ direct days. Sure,
absolutely.
Yeah. Appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.